Andy Rose.
What's up, Brad?
Where the hell's the rest of you, man?
Yeah, I got rid of about 27 pounds. So,
so Andy and I were talking pre-call, and it wasn't how long were we on? Like 10 minutes. As I was typing things out, and then just before we went live, I was like, whoa, bro, what are you doing, man?
Yeah, I started watching what I was eating better, getting consistent with exercise. So I'm hitting my steps goal every day, but I get up every morning early and go for a walk for a couple of miles and hit the gym a couple times a week. But watching the old diet, man, it's the biggest thing.
You know, what's funny is, I think back all the time on active duty. I would go to the PX or the gas station across from the barracks and get a ton of just candy, Reese's peanut butter cups and whatever. And we could eat it and wouldn't gain one single ounce.
Right.
But at the age of 35, I found out Reese's peanut butter cups are not a healthy alternative to lunch. You'll just gain weight. So, you know what? I think that's a good thing to talk about right now, because we've come out of this, last 2.5 years has just been crazy, nonstop action from the time you wake up to the time you go to bed. So a lot of us as agents, as loan officers, or just in general, because of COVID, we've kind of let things slide, right? I think towards the end of 2020, I think I was the heaviest I've ever been in my entire life, sadly, right? But what I found out was I was actually starving myself for too long when I was fasting, and my body was converting it to fat and not energy like it was supposed to. And it was doing the exact opposite effect. So all I had to do was start forcing myself to eat breakfast and lunch, but take those and split them in half and eat every 3 hours, and boom, I lost 45 pounds doing that, coupled with walking,
Yeah. Well, I mean, I'm definitely staying on top of my hydration because it is summertime, and it gets hot. But getting that morning walk in, kind of starting the old metabolism, and then jumping in mid morning with protein shake. That way I can control the calories there, and then really I'll have a light lunch. Usually it's maybe a tuna fish packet, and or maybe a salad with some leftover chicken or something from the dinner the night before, and then having only one plate full of food for dinner instead of two.
You said tuna packet, and I instantly was triggered because my first deployment, we had this mountain of a man. His name was Tyrone. He was a white guy, but his name was Tyrone. He was 6'5", probably 280, and this dude had no fat on him. I mean, he was just massive. He was a massive human. And every day before and after he worked out in the berthing, he'd crack open his coffin rack, rip open a tuna packet and a freaking dipper of peanut butter. So he's eating tuna and peanut butter at the same time. And the berthing was horrible. It smelled so bad. Like, get out of here. But anyways, we're getting off topic already. As you may or may not have known, Andy and I took a 2-week hiatus. It's been the 4th of July. Did you have a good 4th? Did you enjoy your freedom?
Yeah, man. I mean, it was nice and relaxing. I was able to, I kind of limited a lot that day, took care of stuff, earlier in the weekend, and then took some other stuff and pushed it to Tuesday. So that way I could have a full day with the family and friends and just chilling out by the neighborhood pool.
The key thing that you did is you detached from your business.
Yeah.
That's what we forget to do because we work in customer service. So we always want to be people pleasing. And with that, I mean, the belief is always answering your phone or responding. It's okay to have a life, and it's okay to detach so long as you come back when you're not there for a long time.
And this time of year, usually we're so busy that, it's hard to detach, but it's not learning a lot from last year, being extremely busy, and how the market has changed this year. And the difference is, I'm not great with time management. I'll say that, but I've learned things from last year, the last 2 years, with time management and knowing when to block off personal time and say, this is my cut, unless something crazy is going on, of course, but for most days, this is the cutoff time. And then for certain days, not doing much.
No, I mean,
Just need that. I need that break. I had burnout at the end of last year, beginning of this year. And it probably lasted 6-7 months, and I didn't even realize it because I was just full bore, like the Marine in me. Put your head down and just keep hitting that brick wall until it falls down.
my freaking dad always spots it well before I do. And when I start going into my downward death spiral, he's like, "Oh, I saw this months ago. Why the hell didn't you say anything?"
Yeah.
You don't feel it. You're so close to it. You just don't feel it until it's too late. So do not forget to take care of yourself. You said something that we want to talk about today. It's the housing market, and the shift has begun. Right?
Yeah. That 5-letter word that we all knew was coming. We weren't sure when it was going to come, and then it was almost in our rear view before we even realized it, because it happened. It seems like fairly quick. We saw certain things happening, and all of a sudden we felt it. And it was probably over about a month or two time period from like April, May, maybe a little bit in the beginning of June, where things just really, really tampered down. We started getting more days on market. Inventory was creeping up. Now it's looking really good. It's looking almost pre-pandemic for inventory in a lot of areas. The new construction stuff is still going. They're looking good for their inventory nationally. But some of that was tampered by interest rates. It kind of slowed some buyers, put some buyers, off the fence. They weren't sure what they could do. And next thing you know, some of the rates just pushed them off. Like, you can't buy right now. Some of that's easing up, though.
Home buyers have been freaking spoiled for the last 2.5, 3 years. Yes, interest rates are nowhere near where they were in 2020, 2021. But if you look at the historical data or historical readings, we are still 2.5 points below the average rate for, I think, 45 years back. Yeah. So, interest rates are still good. But the thing is the reason why the interest rates went up was to correct the market. How the market's going to correct itself, it's going to force itself, because we went from a really banging economy to a really slow one, right? So we have to go into a recession.
Right.
That's what the rate increase is doing. And we're starting to see it. It's starting to play out. Obviously, we want it to be quicker, but if you're out house hunting right now, just because you have a 5.5% rate or a 5.75% rate or whatever rate your lender gives you, it's not permanent. Yeah. What is permanent is your housing, right? This freaking saying that one person posted on Facebook that just went viral because loan officers and agents alike are not creative. They just copy and paste. Don't even give credit to the original poster.
Yeah, it's R&D.
At least throw a logo on there. If it was me, I'm going to misspell it because I have fat thumbs and I taught my smartphone how to be dumb with all the autocorrect fails. Is marry the house, date the rate. That's exactly what you're doing. You're marrying your house. You want to have a long-term committed relationship with that. Your side boo is the rate. That's going to change all the time. Your side boo is going to change. So interest rates are right now, but they're going to come back down. We just don't know.
We're seeing a lot more arms. There's a 5-in-1 and now a 10-in-1 arm that's out there that people are using. They're getting a low rate in the arm, and then they can wait 5 years, 10 years, and see where the rates go. And if they happen to dip down low enough back into the 4s, I guess, which is generally where some of those arms are at right now, then you jump on it and hold that.
Yeah.
But there are other options out there right now.
There are. I'm not a big fan of the ARM program, only because the amount of savings that you would have from the rate, you're paying for it at closing. So you have increased closing costs for the ARM, but it's a cost analysis, cost benefit, right? Like, does this make sense? Does this not? So again, we say this all the time. Who you work with matters. Absolutely. Do you think a 1-800 call center loan officer is going to take the time to explain to you that, hey, an ARM is not a good idea because you're going to be paying X amount of dollars up front, and then your break even is going to be 13 years. On average, you move every 5 to 7 years, so this doesn't make sense. Right? Do you think they're going to do that? No, they're not. Right?
And that's where I think if somebody's choosing to do an ARM, you kind of break down that cost analysis, at the immediate, and then over that term, and you can say, hey, you're going to make up this much money later on. Are you bullish or bearish on where the rates are going? Because if you're bearish and you think that they're just going to keep going up, maybe an ARM isn't all that great. Maybe you need to try to find some way of getting the lowest rate possible at the time. But we know that they fluctuate a lot. I think that they're probably going to dip back down at the end of the year, beginning of the next year, because of a lot of things going on. But hey, we'll see. We'll see if it happens.
It depends. I mean, there's so many factors that are in play that nobody knows. I mean, they're unknown variables that have everything to do with the timing of this. So, I mean, people are saying the end of Q3, most likely Q4 of 2022 or Q1 of 2023 is when they're predicting that all this is going to start to play out. But
we'll see more of a longer impact of the Fed rate going up to help tamper down the inflation, which took a big hit last week with some of that news. But we'll also be through the political season, which usually causes some level of volatility in the markets. Hopefully we get through that and things kind of stabilize and open things back up for some of these buyers that were left on the fence.
Well, I mean, it's an election year in my state of Michigan, and the governor, her campaign slogan was "Fix the damn roads." She's been in office for 3.5 years, and guess what she's finally doing?
Finally
fixing the damn roads, only because she wants to get reelected. But
yeah, right before the election.
That's a moot point. Anyways, so the market is changing. All right. And it's important to understand. I mean, this week alone, last week, not this week, it's Monday. Holy crap. Last week, Monday, my production partner and I, we ran into a juggernaut. Like, holy crap. The summer home buying market is finally here. It's only the middle of July.
Yeah.
We had a lot of scenarios that came across our desk that are just outlandish that we are absolutely going to talk about in another video, probably next week. Just because we don't want to be too long on this one. We just want to give a quick update on everything. But we received six contracts last week, and 2 of them had concessions on it.
Yeah.
Whoa! Yeah. Let's talk about concessions. What are concessions?
But there again, we're looking at a changing market. There's more inventory, so there's not that huge. There is demand, but it's not such an overwhelming demand where the buyer's not able to negotiate. For the most part, we're looking at sellers are now considering the sales contingency. Right? I was dealing with that recently. They are given a little bit towards closing costs. Sometimes it's after the inspection, and there's some things to do, so they'll give money for that in lieu of. But they are a little bit more negotiable because they say, hey, this isn't gone off the market in the first 3 or 4 days. What's wrong? Nothing's wrong. We're just getting into a normalized market. Everything's just stabilizing and normalizing, which is great. It gives everybody a breather. I did a blog post today about what is the seller to do? Well, they now have time to put their house on the market and then go find the property. It was difficult to do that there for a while, and you don't have to worry about the sales contingency because a lot more sellers are open to it because their houses are just sitting there. We're not getting these multiple offers generally. I'm talking to agents, across the nation. They're not getting all those crazy offers, 25, 50 offers. Actually, my last two listings that are back on the market only had 1 offer each, and they fell through for different reasons. But one of them fell through because the buyer found another property. That hasn't happened in over 2 years. That there was another property they wanted, so they jumped on that and left us hanging. But it's still a great property, and we're starting to get some showings. It took about a week or so to really get it back up there, and some extra marketing that we just didn't have to do necessarily. But luckily, I'm one of those agents that does all the professional photos and everything up front, not one that just throws on a bunch of crappy cell phone pictures and go, anything will sell right now. There's those agents out there too, and those agents are the ones that are going to get caught basically with the pants down in this market where it's starting to normalize, and they haven't been doing all that marketing stuff that they should have been doing, highlighting what they're doing for their clients. And I think that's really going to be the difference in some of this market.
Let's talk about that. That's a great talking point. All right, because nothing should signal red flag more than you have a 1985 Glamour Shots by Deb headshot as your profile picture, right? But the agent appears to be 30s or 40s, but they show up in their 1990s Cadillac.
Yep.
Because I bought it brand new when they retired in 99, right? I mean, these agents are the ones that, they're set in their ways. I shouldn't say these. I mean, that's a whole thrown out there. But you need to watch out for these. The ones that are putting out the false marketing, fake marketing or whatever, if you will, because they're the ones that want the easy button. I mean, I have seen so many posts lately of, hey, how does everybody feel about Zillow leads? How does everybody feel about like they are paying to get leads so they don't have to do work.
Right. And but some of those are those newer agents that came into this industry in the last 2 or 3 years, and it was so easy, right? Because the market was crazy. It just was. So everybody needed help buying and selling, and now where things are stabilizing and normalizing in the housing market, some of these newer agents, those older agents, they know the stuff from back then. They think they got all that experience, but now the newer ones are starting to struggle too, because they don't have that. Either they don't have that deep database, or they don't know how to actually market themselves. It was nothing to market a property over the last 2.5 years. It was absolutely nothing. But what I did was I increased my marketing budget. I increased my budget for photography and videos and drone and all that stuff. I increased all of that to show that I'm willing to do these extra things to highlight the property as much as possible, even in this crazy market. It was easy to sell a property, but you got more people in. And now that's still the same way. You're going to get more people in with those professional photos.
So, that's a great point, man. We're in a market right now, or we're coming out of the market that, I don't know about you, but my year-to-date production from last year to this year, it's down just a little bit, right? Yeah. So it's very easy to say, oh, crap, I need to squirrel and put away and hide and stash and do this and do that. Well, yeah, you should be doing that because that's the responsible thing to do. But right now in this changing market, we have seen just mass exodus of loan officers from all these different companies. They're just getting laid off, right? Yeah. So if there's 5,000 loan officers that have just got laid off and they're no longer on the battlefield, guess what that means to me? There's battlefield to be taken. So I need to go get it. And I'm not going to do it by myself, right? Because why would I? I mean, if it's between me and spending $100 to get all this, I'm gonna spend $100, right? To help boost my message and what I'm saying and my reach, right? That's what you, as a consumer, as a home buyer, that's what you should be looking for. The go-getters, the ones that are doing stuff right now, because in the long run, they will win out.
When the market completely shifted because of the pandemic, right, and everything slowed down and locked down for a while, once things started opening up in different areas, in different regions of the country, it was, hey, this is not the time to slow down. You actually need to speed up. And we're in the same thing, right? The market is slowing down some for a multitude of reasons, but this is not the time to slow down with the market. You need to speed up so that you can gain that extra market share and continue doing the business at the level that you either want to do it or you need to do it. Depends on how you got everything budgeted. But that's really, I think, a key point is some of these old agents, some of these brand new agents, that it's difficult to see that because nobody's ever been through a market like this. Nobody, and those of us that have decent level of experience and didn't slow down, didn't go negative, and just pushed all the positives, not to, blow smoke, but to push the positive side of what's going on. Most of us that did that are the ones that are still out here, that are still pushing, that are doing well.
Yeah. I mean, we cannot control the market. We cannot control rates. We cannot control inventory. We can't control any of that. The only thing that we can control is how we respond to it.
Mm-hmm.
Right?
Exactly.
So as a consumer, that's the things that you need to be looking for, not who's the very first person that pops up when I Google. Right? Because people pay to be at the top of Google.
Right. I mean, I do Facebook marketing. I do Google marketing. I think that's part of what we do to get our information out there. But yeah, I want to be one of the top 3 that you see for Google for the areas that I'm in, covering 2 different markets. I got to cover both of those. So it's one of those things that you have to put yourself out there, but you got to do it in a smart way, and not just shotgunning things are good, right? We know that we can shotgun things, but when you're able to put rounds on target, a specific target, what you're doing, where you're grabbing your avatar from and your ideal clients, then that's what you go for.
Yes. So in summary, the market is changing. There's more inventory coming online every single day.
Right.
Less offers or less home buyers to compete with, because if you're watching this and you were trying to buy a house and got out because rates and all this other crap, you're the reason why the market's starting to change. If you want to get back into it, reach out to a trusty advisor. Reach out to myself. Reach out to Andy. Anybody we're associated with, we will give you the absolute 100% truth about financing with VA, what you can do, what you can't do, which it's appalling the amount of things that I hear, and I know you hear, and I know Stephanie definitely hears, that the VA can't do is actually a 1,000% red flag, showing that agent or that loan officer, that real estate agent, is just an ignorant jackass.
Right.
Because it's just they're blaming the VA for their laziness and lack of intelligence,
or their investor overlays. Their investor overlays, So
so it's you really have to ask some questions, and you as a consumer are absolutely allowed to switch lenders at any point in time throughout the transaction. The only thing you're out is in half an hour because you have to resubmit all your documents. But I'd rather spend a half an hour to work with a trusty advisor, and I know we'll close this loan, than deal with the idiots that are going to drag this out. Are we or are we not going to close?
Right. So I will give the caveat: if you're going to change lenders in the middle of a transaction, especially if I deal with a lot on the listing side, that you have to keep the buyer or the listing side informed. If you're on the buyer side and you're changing lenders, you have to. I had to do that recently, and you have to fold in the listing side. You have to get tell them the reasons. Basically, get the new loan officer to go, hey, look, here's the situation. This other company wasn't able to do it. They didn't have the product for it. We got a product for it, no problems, and move forward and go ahead. I know in the state of Georgia, you can label your loan exhibit and actually put on there the specific loan officer that you're working with or the mortgage company. And I tend to not do that because that locks me into that specific one, and then you actually have to do an amendment to the contract to change. Whereas if it's not on there and you're saying, hey, we're moving forward, and then something happens, it's a little easier to change. You just have to communicate all that. Communication is key.
Boom. We'll talk about this on our next video, but there is a process to switch lenders in the middle of a VA transaction. I just went through 3 of them last week, where we had to get the appraisal transferred over and the LIN transferred over and all that stuff. And there is a process to that. And most loan officers probably do not understand this. So We will absolutely break that down. But market is changing. Get back out there. Inventory is going up. Let's do this together. If you have any questions, reach out to myself or Andy or anybody we're associated with. We'd be happy to steer you in the right direction. Any final thoughts?
No, well, there we go. Communication is key, right? If you've got questions about where the market sits and how you fit into the market, whether you're buying or selling, communicate with a real estate agent. I can get you almost any agent across the country in any market. And then Brad can do the same thing for the loans on that side. If he's not licensed in that state, he can definitely get you in touch with somebody that is, and communicate with these folks to figure out how to take advantage of our changing market right now.
Boom! Well, we're going to end up with that. Andy Rose, appreciate you, brother. Keep getting after it. Semper Fi, brother. And we'll see you next.
See you, man.